Hey guys, how are you? Yep, our friend Peter Schiff is at it again. He's talking about Bitcoin. He can't seem to stop. He must have an unhealthy fascination with Bitcoin. I'll give you my take on why he keeps talking Bitcoin and why he feels the need to talk it down as well. To be clear, I don't over fantasize about Bitcoin, as I've said before, many times before. I think it's an NSA creation from the 96 paper. I don't think I've spoken of my on balance of probabilities guess, which means I don't know, but that there's the whole Satoshi Nakamoto is a bit of a fairy tale for adults, about this altruistic person that just decided to create all this, collect no awards, disappear into the ether, and leave a whole bunch of money on the Genesis block, etc., etc., and his gift to the universe. I've read too much history to buy into all of that. That said, this sometimes you get what's almost like a controlled hangout that's made to want you all to love Bitcoin and swear allegiance to Bitcoin by continually dissing it. And don't get sucked into the Punch and Judy of red being mean to blue and orange man bad. They're all controlled. But anyway, that notion aside, Bitcoin, Peter Schiff is saying Bitcoin pump and dumpers are losing their mojo, he says. They managed to pump the price by $550 in a minute. It wasn't a minute, I was watching it happen, but it was in quite short succession. A 7.5% spike, he says, and then the dump reversed the entire pump with an 8% drop in 7.5 hours. If Bitcoin pumpers can no longer sucker in new buyers, the game is over. Look out below. So that's our friend Peter Schiff's take. The interesting thing that I feel that he's missing, or that he probably knows but is electing not to highlight, is he's threatened by Bitcoin. And the reason he's threatened by Bitcoin is that both gold, silver, precious metals generally, and Bitcoin are behaving as anti-fiats. I'm not just saying anti-dollar, I'm saying anti-fiats generally. I've done YouTubes on my Market Sniper channel, and this is going to go out Crypto Sniper. You should be following both, by the way, that point out that in fact gold and silver are in long-term upside moves. So I'm actually bullish gold and silver, which Peter would like. However, as part of that, I've also noticed that when you get an anti-fiat move on the gold and silver to the upside, which means dollar down, a bit of pain on the biggest economy in the world, a little bit of disappointment, etc. You also tend to, and there's usually a lag, so here's a little tip for any of those that are algo developers. You get a gold and silver move, there's usually a lag before the Bitcoin starts moving. Why? Because the average crypto kids do not care and understand the general markets at all. In fact, the whole reason behind what he called a pump and then a dump was in fact the data in and around the ADP. And I was running a community event for my premium guys, a non-farm, and we watched it all happen as the data came out. 15:15 in terms of our time. That was the morning in America. The ADP non-farm employment change number came out. Now, if you look at the time at which Bitcoin started to move, I'll get that daily chart up. There we go. That's the spike that then went up and then fizzled all the way back down. If I take it down to an hourly for you, you will see that that coincided with that release of data, as it did for gold and silver too. So as you'll see, this is not on my computer time, and you can see that it is the UTC time over here, UTC, and you can see that that occurred in and around the 1 o'clock. I am UTC plus 2. As you can see, the UTC is 9 o'clock and my clock time is 11:23 at night. So you can see that that was in fact 3 o'clock when it happened, coinciding with the data release, because this is an hour, so it was during this hour, because that was 4 o'clock. So 15 minutes into this candle being formed, I've got a pen here, show them everybody. Yep, let's grab the pen. Let's also use this pen. That wick occurred between 15 and 4 o'clock my time, and 16. I didn't do that 15 so nice, kind of confusing. Yeah, there we go. 15 and 16. It was an hour long candle. In fact, I could even drop it to the 15 minutes and split some hairs for you, just so that there's under no doubt. But this was the data. We were there to watch the data number come in. And of course, good old USA ain't half as strong as they thought she was meant to be. In fact, they were expecting 137 and they got 67. So that was less than half in terms of the expectation. That was a big miss. Oh dear. And we were watching that. We were watching it live, and we watched both gold, silver, and Bitcoin all simultaneously run as anti-fiats on the bad data number. They all simultaneously ran as anti-fiat, specifically the dollar in this instance, but they have a broad anti-fiat because gold is also going up against the euro, the pound, and the Swiss franc. But this was specifically a dollar-based bearish news, which saw the dollar lose ground. So to suggest, as Peter has done, that this was a Bitcoin pump and dump scheme was to fail to recognize that you have a higher beta anti-fiat in Bitcoin than you do when you're looking at gold. So gold is a far more stable. It hasn't gone up 10,000% in 10 years. It also hasn't had an 85% bear market. But they both have an anti-fiat trait. And this is clearly observable and has happened. In fact, easier to compare than gold, the higher beta version of gold is in fact silver. Let's see if that comes up. No, I did a snapshot of it for you anyway, so we'll cover it. That's gold. This is silver. What you'll notice if we look at the silver chart is that in actual fact, unlike the gold, let's go back to gold before we go back to silver. Back to gold, back to gold, back to gold. It's real slow. Kind of in a falling wedge. That's what I'm illustrating to you. And also what I'm illustrating is I'm saying, hey, within that, you kind of get a very crooked first impulse. You get a kind of complex second impulse. Note how that's number 2, although it looks like 8. Terrible handwriting. 2, second impulse, along a level that it's trying to hold, and then it spits through it, and then you're getting what I would consider to be a third one, which may just dip through here and revisit before going up. That's what's happening on gold. But during the ADP number, with regard to that, and that was not today, it was in fact yesterday, you can see that you got a run up, and you actually had a sell-off as well on gold. There's a little shooting star. In other words, it popped up and it came back down. It just didn't pop up 7.5% and go down 8% because it's not that high a beta. So it had a reaction, initially bullish, because it means the fact that the ADP payrolls number was so weak and so low means that lower interest rates and more QE are likely to happen. That means more proliferation, more inflation of the currency supply, which means further devaluation of your dollars as they print more of them. They run lower interest rates. They watermelon communism proliferate for all their pet carbon friendly projects that all their mates are running with big salaries and huge shares, etc., etc. That means they'll get all the money and we just get devalued down. But in gold, that was the reaction. A small move up and then a small move down, and actually it closed down on the day despite a bad number, which should see it closed up on the day. So gold fizzled. But it didn't fizzle as much because it's low beta. It fizzled back the whole move in that single candle right there that I've surrounding. It traded up and it fizzled. It just wasn't 7.5%. So let's have a look at the higher beta version of gold, which is silver. How did it do? Now, it's still not Bitcoin. Silver didn't go up 10,000% in a matter of years or decades, but it is a higher beta version. So that means in bullish moments it goes up faster, and in bearish moments it comes down faster. So the little green candle was today. Yesterday, the red candle there was the ADP number, and it all happened at the same time. And I can get the live chart for you, and I will show you. It'll show 1 o'clock on the UTC clock, which is 2 hours behind my current time zone, and that it also happened in the same hour of the data release. I know, because we were watching it. We were all as a community watching it. By the way, you want to become part of a community and see that. None of us bought the Bitcoin fizzle. Why? Because we didn't believe it. We said it would fizzle. That was discussed. It's recorded. It's all part of matter of record. We saw the number and we didn't believe it. And I warned the guys to make sure they contained their FOMO, because it actually went up at a very rapid rate, as you will see from the charts again. But it came all the way back down in silver, and it's a far larger move than it is on the gold. In fact, during that period, this is the entire day, you ended up closing lower than you opened. You opened here, guys. You opened here. Let me just do that again. Here's the pen. You opened there on the morning. Give me my draw tool. Give it to me. Give it to me. Now it's putting stupid squares. Give me my draw tool back. So we opened up there. We traded up to the wick there, and then engulfed all the way back down and closed right at the low and broke that mild grind line of relative support, much like this one. That sees me believe that we may visit a third time. So this is our first impulse inside the wedge. This is our second impulse inside the wedge. And here comes a third one with a visit to the lower end. That's my best guess. Can I be wrong? Of course I can. I'm trying to talk about something in the future. I'm not got a time machine. However, I am a probability forward-looking based price behaviorist who specializes in method for doing exactly that. And that is a nasty rejection. So for his comment about Bitcoin, well, high, did silver actually go? Well, it's done quite a bit worse than gold. And of course, as I've mentioned, it's a relative of gold. I can show you again in a chart on a smaller time frame how that looks, where you just look at the wedge itself. You can see that was quite substantial. You actually traded well through the 17.2s. We can get a high for you just now. And you closed at the 16.8s. That's quite significant. It's better part of $0.50 that was lost. There. Now let's look at what $0.50 is over 16.5. In fact, let's go to that live chart and do it for ourselves. So I will say goodbye to the Mexican peso, which I was also having a look at, which is real interesting for those of you that like a good chart. And we'll do XAG USD, and let's find out how much. So silver, which is a higher beta and is going to be a favorite with Mr. Schiff, as well as his beloved gold, both of which I approve of immensely, did do a bigger dump than gold, and in percentage terms. So let's have a look at it. How much was it on its daily move? We'll remove that and go straight to daily. Pull that through a little bit, and let's get the actual facts. What was the percentage move there? In other words, if I were to post a hater type tweet on silver, what would I say? Well, at one point, and let's just have a look at the numbers up top here, we were at 17.3275 and we closed at 16.85. So as I say, roughly $0.50 over 16.85. That's kind of $1 over 32. That's a 3% range move day. Okay, that's not 7.5, but it's getting close to half of that. And you've got to remember that Bitcoin is far more volatile generally as an underlying than these two precious metals. So whilst gold would have been a fraction, it would have been the silver is approaching 3% and Bitcoin is 7.5%. Okay, when the next move to the upside comes though, I'd probably prefer the returns I'm going to get on my Bitcoin holdings to that on my gold. But that's why we have different instruments of different volatility. By the way, I meant the ADP number, which was Wednesday's number, which was indicative of that which is expected tomorrow, the non-farm number. In other words, ADP does payrolls. It's a company that does pay slips for other companies, and they get an early understanding of whether people are being hired or fired because there's less pay slips or there's more pay slips. So they get a sample of data. The full non-farm number is tomorrow, and we can tell you what they are expecting on non-farm. Non-farm payroll, they had 181, and they were expecting 137 on ADP, and they overshot. So I would expect that is going to come in a disappointment if that forecast for 181 was done before the ADP number. So something to bear in mind. So first of all, Peter, it wasn't a pump and dump scheme. It was a data release that affected your beloved gold and silver, and both went up on the data quite significantly, and both reversed back down. Small shooting star on gold, a bigger reversal approaching 2.5 to 3% on silver. So Bitcoin is just a higher beta version response as an anti-fiat to yours. I think Peter doesn't like Bitcoin because he enjoyed when gold and silver were the only anti-fiats. Now we have a new kid on the block that is also an anti-fiat. It offers competition. In other words, people who should be buying Peter's silver and gold, remember Peter is a seller of bullion and gold and wants to sell lots of it to you, now are spending money on cryptos instead of Peter's silver and gold. That's a problem for Peter's business. He'd rather you bought silver and gold. Hey, I want you to buy silver and gold, but I'm not selling it to you. I just think it's a good investment. But I also think you can't not take the role of Bitcoin into account for this. Both have a place. Grid goes down. Hey, coins in silver and gold are going to serve you very, very well. They take the internet, the phone network down. They're going to serve you very, very well. Holding them physically, it's going to serve you very well. Not having them in an ETF, going to serve them very well. A lot of these things Peter says. Bitcoin, however, practically, as long as there's power and you need to move something around, the mobility, the speed, the cross-planet capability in a much shorter time than mailing a bar of gold. It also has its role and place. And of course, as I've already said, it's a little more volatile, which means both on the upside you get more as well as on the downside. So that's shooting star, well, it's not really a shooting star because it's not in the place. It's kind of an inverted hammer, has come all the way back. So what do we think next? Well, they are correlated now. And Peter doesn't like it. The more he hates on Bitcoin, the more he's hating his own family. It's kind of like, you have two sons and you don't realize that one's your son. And you keep calling the one ugly and they look just the same. They're like twins. You're actually hating on both your kids because they're both anti-fiats. It's just a stupid thing. Your left hand can't hate your right hand. You're part of the same category, the same universe. In other words, anti-fiat currencies. And with this rejection on silver, I do feel there's a decent chance that you get a little bit of a softening before you go up. But at some point, we will get a breakout on both precious metals and on Bitcoin. And at that point, Bitcoin is likely to overperform. So the top performers going down in a down market will be gold, then silver, lastly XBT or BTC. In a bear, and then if I write in a green, it's all inverted. It's BTC when we break out of the wedge. It's silver. And then it's gold. And all good. All good. But that one far better. Bigger tick. Medium-sized tick. Little tick. Little cross. Bigger cross. Largest cross in the bear markets. That's kind of how it rolls, guys. That's kind of how it rolls, bear and bull. That's what a higher beta means. So unfortunately, it's pretty stupid to pull out and attack Bitcoin It doesn't have certain features of precious metals. It's not physical. But some of those physical elements are also detriments. So there's pros and cons to owning both, and I believe and assess that you should own both. And if you're an anti-central banker, you should find space to appreciate all of them without being a lover and an absolute matrimonial, married up, gooey-eyed husband to them as wives, because they could be cheating on you, they could be tracking you. I would say the physical silver and gold is probably your safest, but you've got to make sure it's not fake. You've got to have it scanned. You've got to do a lot of things, and then keep it physically on you. And you can be robbed, attacked for it. Your Bitcoin was probably created so that you can be tracked, surveilled, and every transaction you make can eventually be reconciled and audited with technology that is still to come or already out there. Who knows? But to conclude my discussion, this is a bit of a Punch and Judy show. I feel Peter might be a controlled hangout in this in terms of how he's positioned. In other words, by saying how much he hates on Bitcoin, it's almost like a Trump-like antagonist designed to get reactions, to get all the crypto guys coming out and going, yeah, stuff you, boring, and they want to create this red versus blue. They're all anti-fiats. They're performing like anti-fiats for now, and when the dollar stats are bad, they'll be anti-dollar specifically as they were yesterday, but they did all fizzle. In other words, maybe that data is already very well baked in. You think you're the first to hear the data and everybody reacts. Those are the people that think that is news. The insiders possibly have that news already, and it was already baked into the price. I don't trust Chinese walls and the control structure for having a real news release that will see you be the first guys to hear it as it's released, that there's this perfect democracy of information, and I think if you have that fantasy, you're also suffering under a fantasy. So what ended up happening is the market went up and it went back down, and they're all anti-fiats, and by antagonizing one, he is antagonizing the category, two of which are right in the heart of what he calls his business. So maybe, Peter, spend less time attacking the anti-fiat category, as all the arguments and the cases you make are that of someone who believes that the fiat system is due to fail. Accept and acknowledge that there will be both electronic versions through the blockchain, and there will be physical versions that will all serve a role as anti-fiat dim, and that sound investors will have a little bit of both. So that's my take on the Peter Schiff tweet. Maybe a little bit long-winded, I'm sorry. What's my call? Well, the call is, as I've already suggested, just to reiterate, the potential exists. The potential exists for another push a little lower, but it doesn't have to happen. It could be very minor. It may not make the other side. It may do. We may then get a break with a degree of a return move, and then we can move on up. We may just squeeze into the gap here and hold the grind line, but that was a very strong rejection candle. So this little green one so far, it's a little bit of a reaction, but it's very minor. It's very minor in terms of how vicious this was. And you've got to remember, the news was so bullish. So if we didn't get away with that bullish news and actually we sold off, probably the guys had the news before, had it there on the rumor, and were selling the fact. So that means we're still a bit soft and it's not good enough for news. So you'll probably get non-farm confirm that. Even if non-farm number is poor, as I suspect it will be, many people will already have that baked in terms of their opinions on account of the ADP number. It is a warning. There's the non-farm expectation again. Let's take the squiggle off. It's tomorrow. We normally sit and present right the way through the non-farm number. I did the ADP number this week, and it's part and parcel of our premium service. You can find out more about it. And the other key point was we watched the spike come and we said, do not long it. Do not long it. It's most likely to fizzle, although that's not a reason necessarily to short either, unless you catch that key moment as it starts wicking and selling off, and that's very close and tight stop. So we observed that largely, and we avoided getting involved into the fray, and that I think was the right thing to do. So little bit of softening to come for silver, maybe a little bit of softening also for gold. So I'll run you past the gold chart one more time, and then we can say goodnight to Peter Schiff, and we can tell him to stop hating his right hand with his left hand, because at the end of the day, the anti-fiats are the categories we should be in. The gold, as you can see, just the small shooting star, and then it's had another smaller shooting star. Let's make this bigger slightly, both of which are relative high type warnings. That means you could have a little bit of easing before you get your run. That and that, relative high, two successive shooting stars. So a little drift off maybe first before we then get eventual move out of our wedges. Both are in falling wedges, and Bitcoin itself, when that moment comes, should firm up. It should firm up and may outperform gold and silver at that point, but it may drift off first a little further, given that silver and gold may do. So it too has a little bit of a level here, and it may drift off. It could possibly even make a new low or a double bottom low before we get to that point where the gold and silver start breaking their wedge. So watch gold and silver, set your alerts there. As it starts breaking its wedges, then you can swing long potentially on Bitcoin, and we may have our relative low too. Remember, we are working on a super macro case of the 20K, the 14K, and somewhere around the 10 to 12K long back down. So that's your 20K, your 3K, your 14K, and we think somewhere between 4.5 or our recent low right up top here at 6. So you could be 4.5 to 6.6. We may have done it, and we may dip a little lower, or we may meet the same level again. And then I think we'll be in an upside move in and around the 10 to 12K level. Not too far, not as strong as this recent bull market, and certainly not as strong as the melt up bull market, but reasonable, and you'll take some money out of it before the big sleep comes. The big sleep, you'll get regular spikes that will look like they're breakouts that will only fizzle on you, and they'll cry wolf so many times you're going to stop playing in frustration, and you're going to lose so much money until the real break comes. And that will be the problem. Stay out of the game once we've made this low and we've had a short long up to the 10 to 12K. Stay out and observe, wait for the squeeze. All right, that's a long clip, and I have repeated myself, so I'm going to go to bed. You guys enjoy yourselves. Understand where Peter Schiff may or may not be, and I think gold and silver, a little bit of easing first, but not too far away from their moment of strength. And rather than it being negative for Bitcoin, it's going to be positive. And the problem is Bitcoin might end up stealing their headlines away from Peter's gold bull, and that'll upset him even more. What can you do? Okay, bye for now, guys. Hope you enjoyed it. Cheers. By the way, don't forget to grab the mini series and come and book a chat if you want to join our community. Bye for now.